Is this the tech sell-off we've been waiting for?
Yes, I think so. And it really shouldn't surprise people given how overextended tech has gotten. But obviously you needed a catalyst and we got a perfect one. And look, it makes sense that, tech has seen a lot of multiple expansion. It is fully accounted for, I think, the earnings potential, which is much more so greater than the S&P. But at the same time, now you have a perfect catalyst for small caps and utilities and other rate sensitive sectors like REITs, for example, which is the Fed rate cuts. And so I'm not at all surprised to see the rotation. And in fact, we've been seeing hedge funds that have been actively selling tech starting in June and continuing in July. And I think there's much more to that trade.
Why is now the time where small caps will be rallying for real and not just a fake out?
Well, growth has been okay and growth has been strong, but that was not enough to support small caps and the other parts of the economy. The reason being is there's a lot of leverage embedded, for example, in some of the smaller cap companies. There's a lot of leverage embedded in real estate, and what they really needed to perform are those rate cuts. And now with 90% probability of September, I think that's what makes it real.
Well, I'm interested in that correlation too, because there's a reason why you're seeing the Russell up 3%.
Yeah.
And I thought about that because everyone was saying, okay, the rate cuts were going to be the salve. Now, we're not necessarily getting them, or at least the Fed hasn't said we're going to get them.
Yeah.
But you have a bond market repricing for that right now, and presumably, at least for one corner of the equity market, also repricing to that.
I personally think the Fed is running out of excuses to not cut interest rates at this point, because not only do you have inflation that is clearly cooling, we got some great numbers within the print, whether it's on Supercore, whether it's just the monthly pace and the fact that it's annualizing at 1.1% over the last 3 months. So the Fed doesn't have the excuse that inflation is not coming down. It is. The Fed is also looking at the labor market, and there's clearly weakness that's emerging. And of course, Fed Chair Powell did admit this week that the labor market is in full balance. So what are we waiting for, especially when the economy is slowing down? So, to Alex's point again, that's what makes it real to me this time around. And when it comes to the market and kind of going back to the tech trade, the market prices this in advance. Part of the reason why we've rallied as much as we have this year is because we've been sniffing out those rate cuts. But what's interesting is the rotation that we're seeing is exactly what we have seen historically. Tech rallies into the first rate cut, then it consolidates in the 1 or 3 month period. But what tends to outperform are those interest rate sensitive sectors, and actually utilities ends up being the top sector in the 3 month following the first rate cut.